A letter they put out just last week encouraging them to make nuclear part of this energy debate. Without it, you can't be serious about delivering baseload power or doing it in a clean way.
Hello there, my friends. Chris Marcus here with you from the StockPulse Network, and we're at the New Orleans Investment Conference, and I'm excited to have one of my newest friends, Scott Melbye, in particular because one of the markets I've been learning about ever since I caught up with you in Vancouver is uranium. Right. And Scott, part of Uranium Energy Corporation and Uranium Royalty Corporation. So it's great to have you here, and perhaps you could let folks know a little bit about what you guys are doing. You've certainly gotten my interest in the last couple months, and market many people maybe not as familiar with.
Well, Chris, thanks. It's always great to sit down with you. And we are very excited in the uranium sector. And I say finally, everybody knows we've gone through quite a prolonged bear market. Lasted about 7 years, and really we saw the bottoming of uranium prices in November of 2016, 2 years ago, at about $17.75 a pound. And we've increased over 60% in the spot price over that time. But it's been a very slow increase to this point, where we've had some false starts. Uranium price on good news when we've had production cuts out of Kazakhstan and elsewhere. The price has gone up quite dramatically, only to drift back down to the $20 level. It's done that twice, but now we're seeing prices break through those levels and move higher, and still very much in a level which does not stimulate a lot of new production, which means we'll continue to see supply discipline by global producers, right. Which will help rebalance this market in a much more rapid fashion than we were seeing prior.
Yeah, and as often happens in these cases, when you do have low prices, obviously, I like how Rick Rule phrases it, well, we're selling it at a loss, but making it up on the volume, which means that a lot of the supply, there's less incentive. So it's an interesting market, and how does that play out, and how has that affected the supply and demand?
Well, it really has, and uranium is a little more unique than, say, copper or gold, where there's a lot more immediate real-time response to price signals. Uranium market's typically a hedged forward selling market under contracts. So what you have is a lot of producers that had been sustained by higher price contracts signed in a previous cycle. That has shielded them from the lower prices in the low 20s. That's changing now. Those contracts are rolling off, and that protection's gone, and that's what's causing producers to shut in. The other side of that coin is, though, that utilities are also becoming uncovered as those contracts come to an end, and they're not coming to the market to replace the long-term contracts. That's significant because they're looking at the low $20 spot prices and saying, well, let's buy short-term spot or medium-term contracts. It's a very short-sighted strategy because the supply and demand fundamentals are changing, and just because uranium is cheap today doesn't mean it's going to be the case going forward with the supply rebalancing that we're seeing. So they have a big procurement cycle to resume in the coming months. Really, they should have been contracting at higher levels than they have, but that's the next shoe to drop is utility buying and long-term contracting.
Yeah, and to the degree that you can get into it, any thoughts on UEC's policy of whether you're hedged or unhedged? So if people are maybe looking or expecting a higher uranium price, how that would play out with what you're doing?
Plays very well into our strategy. I mean, we are unique in the space because we are an unhedged seller. So we do not sign forward contracts that would cap any upside for investors. It would, but we also have to have the discipline to shut in when prices are low, and we did that. We shut in our mine in South Texas at Palangana in 2013, even though it had very attractive and still does have attractive cash costs of $22 a pound. We believe that the resource is more valuable in the ground and produced in a better market that adequately reflects the return on that. So as uranium prices increase, we think moving into the $40, $45, $50 range, we have a whole suite of projects from Palangana, Burke Hollow, our newest acquisition in Reno Creek, that we'll be investing in over the course of 2017 to really continue to advance that production readiness. So that means advancing at Burke Hollow, for example. We'll go into the first production area, establish the monitor well rings, which is a prerequisite to production, and even do some of the drilling out of the initial production area at Burke Hollow. That's doing everything but produce. That will wait and flip the switch on it when prices get into the 40s. But we're doing everything we can while we have the luxury of time to permit, license, and de-risk.
Right, and again, I'm a little bit newer to the uranium market, although one of the things that really caught my attention from Amir's presentation back up in Vancouver is that in some ways reminds me of silver, where if we want to be doing certain things as a society or a planet, either the price is going to have to go up or there's just the supply is not there.
Yeah, it really is. And I mean, I think if you look more globally on the demand side too, Fukushima was a big challenge for the industry.
Right.
But as we sit in 2018 today, the nuclear generation capacity online in the world today, it dipped after Fukushima, but now in 2018 we've actually risen above the level that we were prior to Fukushima. Mm-hmm. So the demand side is good. We're seeing increasing support from environmentalists in the whole carbon emissions, climate change debate, that they're coming to the realization that despite all the COP treaties and international meetings and commitments, carbon emissions are going up globally. And in some countries like Germany, where they've reduced their nuclear reliance, they've been some of the worst violators of those carbon emission goals. So we're now seeing a chorus of climate change atmospheres, experts around the world all coming together now and urging the G20 leaders in a letter they put out just last week, encouraging them to make nuclear part of this energy debate. Without it, you can't be serious about delivering baseload power or doing it in a clean way.
Yeah, and that's one of the things that I find fascinating about the market, where you really have a lot of moving pieces. You can't just go out digging, yet you have all the politics. Anytime governments are involved, obviously things have a quirky way of playing out.
Yeah.
Perhaps you could anything you could mention in terms of that and some of the challenges.
Sure.
I know a lot of that falls to you.
I think in our society today, it's hard to permit and get a road built, let alone a uranium mine. And that's an important point. Uranium prices could increase pretty dramatically. We might not have a big rush of production to the market because of that 7, 8, 9, 10-year lead time required to bring on new mines and go through the permitting and licensing process. So that's another added point to the narrative here, that unlike copper or gold, where there are a lot more mines on standby or spinning reserve, we could have prices increase pretty dramatically and still not get the production response that people would expect. And in fact, there was a mine that was under development in Spain that was just announced last week that the government is not supporting the license. I don't think it's a done deal yet, but that would have provided a lot of jobs in a place where they need employment. But the point is that the price could be $50, $60. There's no guarantee that mines get licensed or permitted. So if you are fortunate enough to have assets that are permitted in good jurisdictions that encourage mine development, that's a huge asset in the world today. And as the market turns, those are the companies that are going to be rewarded with the kind of first mover advantages.
Yeah, and along those lines, one thing that I think is an interesting way of approaching, let's say someone's already invested in uranium. What is unique about Uranium Energy Corporation that perhaps would be something that would incentivize someone to say, I'm going to sell that share and invest in what you guys are doing?
The advantage to UEC are really the three pillars of our strategy. Is that unhedged approach, de-risking and advancing assets in the down cycle to be ready for the up cycle, and the investments made in new assets at cents on the dollar in the downturn, Reno Creek in Wyoming being a great example. And listen, we have ready production and low production costs, first or second quartile. The other thing we have is we are a U.S. producer, and the Trump administration, in the same fashion as they did with aluminum and steel, have initiated a 232 investigation on foreign imports. It's anyone's guess how that is concluded by the Commerce Department, but we know the Trump administration's propensity to use this in sort of trade issues on a whole host of industries. So we're going to be watching that very closely. It's ironic that the U.S. has the largest fleet of nuclear power plants and huge fleet of 108 reactors in our naval submarines and aircraft carriers, yet we supply only about 2% of that nuclear energy demand from domestic mines. So there is a very strong national security argument for uranium. We'll see how that shakes out, but it could create a very strong and immediate demand for U.S. origin uranium and hopefully a premium for U.S. origin uranium. So as an investor, you get leverage to the increasing global uranium market, which is going to get to very healthy levels on its own. But you might get a little turbocharged effect owning a U.S. producer like UEC in this sort of Trump administration trade environment.
And Scott, I know you're a very modest and humble guy, so I'll add this last point on to that. My own question, everything I've been learning is really having a good team in place, people who are known in the industry that have good relationships, and as someone that I used to study the numbers and the finance part, which is relevant, yet in later years really study the people, seeing how companies often become a reflection of the people who are running it. And I've been really impressed with, it's been nice getting to know you, and even before I met Amir Adnani, hearing just the way people speak, the entrepreneurial skill set. So I think you guys are doing a great job, great market to be in, and a great team. And perhaps just you can let folks know where they can find out more information and perhaps get involved. Yeah,
well, certainly at uraniumenergy.com, our website, our investor relations team is ready to provide any information that people would like. But again, we're very excited to our patient shareholders that have hung in there and in anticipation of these events. It's exciting for them, for new shareholders that we have coming in, and the interest is really growing dramatically. It's an exciting time to be at UEC.
Yeah, especially one of the themes that's been echoed throughout the entire week we've been here is that when prices are low, if you like buying low and holding on, maybe one day selling high or just holding on for the long term, certainly an exciting environment to be in. So it's a pleasure to see you again, Chris, my friend, and we look forward to following your success.
Great, thank you.
All right, thanks, Scott.